Welcome to Trading Lounge and the gold silver report for the 26th of February. So just on the weekly chart here, just going back over the old ground, so to speak, we're looking for this wave 4 to play out. So we're expecting a move lower here now for this, and then finishing off there. So we were looking at 2 counts coming down into here yesterday. So let's go back in and review those, and one of them will be right and one of them will be wrong. So let's go to the one that is right first, which is this one here. So just down here for this, and looking at it as wave 1 and 2 here, and ABC for 3 here, and we'll look for the same here as well. So we're looking for a new low to go below here. Yeah, so that's on its way. So there we go. So still further to the downside to come at this point. So we're looking at this low here, but let's just review this top here a little bit here on the 4-hour chart. I think it was, we were looking at a possible move like this here. So from here, an A and a B and a C wave down through to here, but obviously that's not the right one now that we're coming down touching the previous low here. So we're going to be breaching that. Obviously there'll be some support coming into play for that there, but let's go in and take a closer look at that and the reason why it's not going to pan out. Because if we looked at it here as finishing down here, this wave 5 here, so we were looking for a move up. So yesterday we were looking at it as a possible wave 1 and 2 here, and 3 here, and 4 here, but we just didn't get our wave 5 to come in here, and then we were looking for our wave 2 to come back down here. So we just didn't get that last wave, we didn't get that impulse wave. So we're left here now with an ABC pattern. So we can just tidy this up a little bit. So in this instance here we can, let's just move these out of the way for a second, one thing at a time. So we didn't get our impulse wave, so that just didn't get that 5 waves up there, otherwise we would be going long from that point. So that can be moved out of the way, and we need to look at this here as an ABC pattern here. That could also be labeled a little bit differently, but that's okay, doesn't really matter. We still just didn't get our 5 wave structure to the upside for that. So we'll be moving lower. So we can look, I can start labeling this. We can start labeling it in different ways as well, but we're going to see some support here. There's probably 5 waves in there, but I'll need to sort that out. So we can expect a bounce and then another move down. And normally when you're coming down across, you know, the old lows here, let's just put that across there for a moment. So normally what happens is you'd come down, obviously people take profit, and also then you'll see your bounce here, which I'm expecting to be a 4th wave. And then the 5th wave will come down and probably pierce it somewhat. But eventually this here will become the resistance here. This low here will become the resistance, and then we'll see it work a little bit lower from that point, but not much lower at that stage, because we just really need to count 5 waves down here. So yeah, so not too far at all. Okay, let's have a quick look at silver. So we've been looking at silver in 2 ways. We've been looking at it as a bullish count and also a bearish count. And at a particular point in time, we'll be able to sort which one is correct and so on. So this is the bearish count here in a nutshell from wave 3 here, looking back for wave 4. It can be wave B here and wave A up here as well, but main point here is that we go down for wave A here, then have an A and a B and a C wave here for the B wave, and just taking out the top here creates an expanded flat correction. So if we're having an expanded flat correction, it means we need to take out the low of wave A here for this. Now, obviously, if this moves all the way down here, I mean, how will gold look at that point? So that's one question. So that doesn't really sort of add up a lot, unless gold is really going to drop down a lot further than we think it's going to drop down. So we just need to be sort of mindful. The point with this one in here, I'll just go in and explain this here, I think, and I think I've got that maybe on the 4 hour or the, okay, yeah, this is it. So with our B wave up here, then we can look at this down here as an A wave or wave 1 here, and then we'll look at this as the A, the B, and the C wave here. And that also pulls up from that high to that low. This is the 50-60% retracement level. So that was our target. And it just needs to work lower from here. Simple as that. Will it work lower? I don't know. But at the same time, we can also go, normally this is the first high above the level, so we could go long there. But now we can also bring it down to here. So that would be the long trade at that point. And this can also be looked at in a bullish manner. So let's just go back out and look at the bigger bullish pattern and then work it from that point. So wave 3 over here with an A wave here, a B wave here, then 1, 2, 3, and then A, B, C, D, E here for the 4th and down for the 5th here for the wave 4 here. And then looking at this as 5 waves up here. And then back for wave 2 at the 61.8%, and then we had the short squeeze here for this. So yeah, so that's spiked it up a little bit, and the banks end up, the people that are shorting this market or controlling this market sold 7,000 contracts to push that down apparently. So they push that down. So those short players are still in this market, you know. It's really only when the commercials, the people that actually use silver in a commercial way, realize that there's no stock to be had, then they will be wanting delivery on their futures contract. So that's really the one that's really the market, maybe the palladium market, but more so the silver market will sort of blow the situation up rather than the gold market, because gold is really just stored and not used a lot, except, I mean, I don't know a lot about that as Indian weddings and so on, but the commercials that use silver would be the trigger, I think, to move this off from what I've read and so on. But yeah, just staying on the positive side here, because I'm just the pattern person, not the fundamental person. It's not my field of study, but every aspect is interesting. It's just how much time we've got to look at everything. So 1 and 2 here, and then 1 and 2 here, and then 1 here. So 5 waves up here for 1, and then the A, the B, and the C wave here for wave 2. So that plays out right. Now, if this low is broken here, then this pattern is destroyed. It's still possibly that we could still have wave 2 here with wave 1 up here, and then an A wave, a B wave, and a C wave coming back down here and bring wave 2 over here. That's also possible as well. So we can just pop that there for the moment and just dull that out. So it's just a bit of an alternative situation. So it's possible. Now, I need to go to and what we were looking for here was a classic trading levels pattern here for this. So really we had our arrival, the reaction, the first high above the level, and then the ABC pattern here. So that's what we sort of look for there with that, and this normally looks a little bit like this one here. So if that's the $28 mark, which is number $28, which is the 8, which is a minor level, so that's important. And so we've had the arrival, the reaction, the first high above the level. So we've got that high in place, and now we've got the second high in place. So we can go long there. We may be able to get a better entry over here for this as well. So we don't have our entry just yet, but we do have, well, we have this top here, and then we have this top here. And if you're looking at intraday data, tick data and stuff, we may be able to get another position here. But because we've got a bearish count with this as well, we will need to be extra careful here. So I'll just for the time being leave it here. Let's just put a big if here. If the market moves up through here, then you can go long at that point. Because we've got 5 waves here, as a corrective wave to the downside, an A and a B and a C wave here, and then moving down, we shouldn't go above this high here. So if we do go above this high here, then that would create the long trade at that point. So I think we've got this on the hourly chart, I think. Right, okay, so let me squash this up and mend the errors of my ways. So we're looking at wave 1 up here. I've been working 2 counts on the hourly chart here, but yeah, so down for 1 here and then back for 2 over here where this top is here. But on the bullish count here, we can look at this here and adjust this here. So wave B here now and wave C over here. And this would also be the 50-60% retracement level here for this wave 2 here. This one here can go over here. That one can just go over here. So this is the bullish count that we're talking about here. So yeah, so that's it. So we're getting there with this. We just need that top to be taken out. So that will probably need to go on there, and this would be 1 and 2 here. It's probably most of the 3rd wave coming into here. So we'll see a 4th wave and a 5th wave to come down here. And then we want to see it move up here. So it's either going to move up there, and also too, once this low comes in place here, that would also give us the short trade as well here under this low here. I'll just put it across here. So I suppose a short trade, just to what we could do here is use the 2700, and then we could look for, because so if the 2700 became the retested resistance, so we're doing a classic trading levels pattern here as well. So if that became the resistance here, so we'll have that first low below the level and the second low below the level, just a bit of reverse of these guys here, but under the 27 here, then you can go short at that point. And if you're long over here already, that's where you need to have the stop there as well in this case. So we've got a more refined stop here now. So I'll just put it under here, but you could refine it to the second move here as well. I hope that makes sense, because you don't want to be holding it past that point, because we don't know what's involved at that point. So we're basically working ourselves, or the market is working itself into a corner. I mean, the market knows what it's doing. We just don't know what we're doing. So we're just waiting to a point where we know what we're doing, and taking out this top here would be the starting point of that. So the market is working itself into a corner of becoming long or short here for this. That's about the best I can do with this. Yeah. 1 and 2 here, 1 and 2 here. So those two are connected there. That's connected to that, and that's connected to that, and that's connected to that high. And otherwise we've got 1 ABC for 2 here, and then up for 1, ABC back for 2, and then heading up for wave 3. I don't know if that's going to happen, but I don't know what's going to happen with this, but this is just nutting it out to that particular point there. Let's just have a look at the dollar. So for the DXY here, this is just an hourly chart, and we've been looking at wave 3 low here. We identified the move up here. We expected it to be a wave 4 correction, and this time we were right, and we've got the A, the B, and the C here for that. This is corrective here, a corrective rally, so that means that we'll be making a low below this low here, and that's something that I've held for a while. So we've just monitored it, and we're watching this move down as 1 and 2 and 3 and 4 and 5 here for wave 1 coming into play here, and back for wave 2, the 50-60% retracement level. Don't need that. And then we're looking for the move down. So the move is, I have to pull that apart to get that exactly right, but what you can see here is that we're on the right track here. Now it is possible that if I can just clone this here, that this can be a B wave here. It's just something that we have to work through, just another spanner in the works. So all of this could be the A wave here, right? The B wave here, and clone this here with a C wave over here for wave 4. That's the problems with wave 4s. They can get a bit complicated, so we need to be a little bit mindful of that. So that's something that over the next few sessions we'll be working through that, because that will put a different spin on what happens to gold. You know, if that rises there, then gold will come down, you know, so we need to be a bit careful of that. Yeah, so we can also have a look at the rates as well. So with the rates here, this is just the government bonds 10-year yields here, so just get that into perspective there. Sorry, it's not a very good picture here for all of this, but still getting used to this charting program. But basically what I've been doing is counting this to the upside here, right? So from this low here, I was looking for another 5 waves up here. So I think we got wave 1 and 2 and probably 3, 4 and 5 here. So this is at 150. So at the 150 here, I was looking for this high over here. So I'm looking for a high here. I may have to adjust this, and because it may just be a wave 3 here, and we'll come back for a wave 4. But I think we will struggle at the. I think we can pull back down from this area here. Okay, I think we can at least do that. You know, that will take a bit of pressure off the stocks at that point, because when I have a look at this, if I just go to the weekly chart here, just as some resistance here, because the 150 is in terms of the trading levels, is a medium level, and we are coming back to check support resistance here on this, in this zone here. So sure, it may go above it, but it's going to be under a lot of pressure at that point, you know. And this is the same thing when we're looking at you know, just when we're using a level here, so to speak. You know, it's when the market, can I use this one? When the market comes down to a level and it bounces back off it. It's the same thing on the other side of it as well. And then it will come through here, and then it comes back and checks it again. So that's what it's checking at the moment. So then it can also move down after checking. It can make a new low here, so it could make a new low in this regard. We don't know that yet, you know, but this type of behavior here is what's going on the weekly version here. And we know that the Feds wanted the rates to be pushed up, but they didn't expect them to be pushed up so fast, apparently. So if they didn't want them pushed up so fast, then they're obviously going to do something about it, aren't they? So I think that this is the space where they will do something about it, and the space will be in this, where this volume is here, in this space here. So I think we're going to see the yields turn lower at that point, and that will you need to give that some thoughts on how that's going to affect the gold and silver markets. Alrighty, yeah, I think I'll just leave it at that. That's confusing enough. Okay, enjoy the weekend. Cheers.